Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Happy options. Oh, I don't need my echo here. There we go. Uh, let me shut myself off. There we go. We've got options expiration coming up. I mean, there's nothing more to be said than that. We've got a lot of volatility ahead of us. And for me, that means very succinctly, today is a caution day, most especially for day trading. My favorite hour of the day to day trade is that first hour, 9:30 to 10:35. When I know that we're going to have a lot of volatility oriented to major psychological levels, which are typically where those strikes that are going to be in play. Look at the put and call side. When they're both high in OI, you know that you've got a lot of attention at that level. Likely a place where shenanigans are going to take place. I don't want to get caught up in that. I think it's a really good day to focus on daily time frames. It's a really good day to focus on relative outperformance, but I will be in the Sector Secrets Mastery Room as well as the day trading room the first hour of the day. So we'll take a look at the market structure and what kind of mood this particular, the indices, the treasuries, the currencies are in, and we'll take it from there. All right. So that's the plan. That's the game plan for me today. And then I do want to look at a few key markets, and then we'll jump into the questions. Is 6E going to continue to march higher? By the way, that is a direct line to those of you like myself who are wondering if the dollar is going to continue to sink. And according to the ES YMNQ, as long as that 6E moves higher, as long as bonds move higher, the ZB, we're probably in pretty good shape for buyers, right? We're in pretty good shape for the bulls looking for, generally speaking, higher highs. I know it doesn't feel that way, right? I know it doesn't feel that way when we look at the daily time frames. And all week long, I put the free videos out at the Simple Trading YouTube channel talking about the long side of the market, talking about being bullish. But if you haven't checked it out already, and we're going to have a lot more discussion on this over at the countdowntrader.com as well. So for those of you that may not have checked that out, Countdown Trader, www.countdowntrader.com. We're going to be talking about a lot more of that. Check out also yesterday's free video. I don't think I have my browser up right now for that, but check out yesterday's free video and you'll see I got much more specific about where the strength is in the market, either at the index level, Dow, whether that be gold versus silver, gold, and to keep an eye on a very fresh possible uptrend in bonds, which means lower yields. All right, so let's get to it. Let's get to it. As always, gang, your questions are what this show is all about. So first up, hey there, Brooklyn. Brooklyn's in the house. All right, can we take a look at NG? Sure, natural gas. And are we bottoming here? How is CL looking? We are not bottoming here, not yet. So Brooklyn, we have a seasonal tendency that we are getting closer to as we go into February. We're still a few weeks out on that. We do have still a very determined downtrend. Momentum is red, bearish. Trend is red, bearish. So not yet on natty. However, you asked about crude, and crude is absolutely transitioning. So if you take a look at the transition we saw specifically, how specific can we get with the top system, with the multi-trend, with the grab, with the wave, to the day in which we can say a trend has begun and a trend has broken? And with the multi-trend, I can tell you really confidently, on the 23rd of December, crude was no longer in a downtrend. And you can see crude's not putting in lower lows anymore, right? It's not ready for the uptrend yet. However, the first step to getting out of a downtrend is to stop the downtrend, which is that neutral chop, that yellow trend I talk about. Now we can start looking at 1, 2, 3 patterns. If you don't know what a 1, 2, 3 pattern is, and really we could have, I believe on the 18th of this month, January, we have completed a 1, 2, 3. It's not a pretty one, and it's probably not one that I would say would be the ideal criteria for what I look at. We could even say that, quite frankly, on the 23rd of December, we could have completed the 1, 2, 3. And as long as we don't break down lower than 70, the 70 handle, I'm pretty bullish on crude. All right. So thanks, Brooklyn. Appreciate that. All right. Next up is, hey there, Kevin. Thoughts on EXC? So wandering into utilities for a swing long double green, sitting on the 200. Let's jump on over to the tops layout. There you go. 200. We're beginning to see the sign of a minor low. I do like this in terms of the setup that you're laying out there, Kevin. Let's do one other check. All right, let's do one other thing. And that is, let's crack open the XLU. All right, let's crack open that XLU and ask ourselves, all right, structure-wise, is that the best look at a trend within the utilities? And, DUK, by the way, Kevin, is doing something very similar. However, if we are concerned that XLU, the tide, the bigger picture, is trying to move lower through not only the 200 propulsion, but the Darvis level you see on that large chart in the on the left side, EXC is lower weighted. And if there's liquidity, and I don't know if there is sufficient liquidity, let's take a look here. Let's see if we can't find maybe a 40 call, maybe 41 in February, maybe out in March even. Give us a little bit more time. I'll tell you what, my friend. Is the feeling. We got to go. Well, it's not too bad. We've got to go out to, yeah, you know what? I'm looking at February, March, and now April on my other screen here. I don't have enough liquidity to strike that I need. Not even 40. However, the closer we get to the 40 handle, watch the OI. If we can hit 500, EXC is definitely something we can keep an eye on. And I like that you chose that one, Kevin. Lower weighted in an environment where we're not really sure if NEE is going to drag down Duke and Southern. We can go lower weighted. I love it. That's really some very good sector food. That's exactly what we do in the Sector Secrets Mastery. And that is some straight up really good sector food right there. Impressive. Love it. Okay. Moving on. Hey there, JR. I entered a long position in UNG. All right, let's go back on over to Natty. With a 124X. Oh, way out there. Do you think adding to it, if any more? So I can't buy, JR, I cannot buy NG yet. It's not something I'm allowed to do because of the red trend. So if I say yes, I'm absolutely just sort of making something up here on the fly. I'm freestyling it. And while I do want to seasonally be aware of the upside, and you've given yourself a lot of time, I'm sure you paid a pretty penny for those calls. I've got to wait, my friend. I've got to wait. I don't have a setup yet. So my thoughts are, I do like the long side, but I can't do it yet. And my tools, gang, the tools that I share with you all, these are designed not to give me more choice, but to limit what I can do, to very tactically whittle down the possibilities in terms of strategy, levels, and finally price, to offer me some automated clarity on what I can do and where I can do it. And therefore I will really follow them because that's the process that's given me the edge for 3 decades. Yeah. All right, Edwards. Can we look at the YM on the daily? Of course. Looks like it's getting close to a buy the dip off the Darvis and bottom wave, DIA for a swing trade. So again, and this is lingo, but I think the lingo and the definition of is so important. If I'm looking at a buy the dip, it's got to be a trend. Where are my drawing tools here? It's got to be a trend. I have to have a green trend on my multi. I've got to see that the grab candles are dominated buy the green grab candles and really no red. I don't have that environment. So once this turns green, that's where buy the dip as a strategy will be valid. In the meanwhile, though, I like your idea of a buy. And so what kind of buy is it? It's a chop buy. Well, that means I'm looking for an oversold stochastic. I'm looking for support at the, as you can see here, the 200 or the Darvis right there. And then I might be looking for a minor low pattern. So there's a lot of things I can stack in order to give myself a better shot at finding the timing, very much like back in here. So if you want to know, if everyone here looking at the daily YM futures, YMH, H for March 23, take a look at the December 20 to December 21 move. That's what I'm looking for. That's specifically the pattern that I'm looking for. It's a price pattern. It's not a chart pattern, meaning I'm looking at lows and highs to identify the trigger for the pattern entry. And ultimately, that is what I would like to do again. I mean, this one had an oversold slow stochastic. It had a neutral market trend. It had the pattern. It had the 200. It had the Darvis. That's beautiful. I'd love to see as much of that as possible on round two of the same entry, possibly. By the way, then and only then, Edwards, can I go over to the DIA and look for an at the money call or slightly in the money. All right. So thank you for the question. Good eye. Good eye. That's going to be an oversold buy or what I'll oftentimes call an oversold fade, right? We're going to buy into weakness. That's the fade, right? We're fading weakness. All right. Next up, Rafa asks, don't I have a buy signal green arrow? So Rafa, thanks for the question. We never get in just because an arrow popped up, right? We always structure dictates strategy. So Rafa, no. If structure dictates strategy, that means that I have to have at least a neutral market environment to look at a buy. And what is my dog so upset about? I might have to go deal with that in a moment. All right. So no, we just don't follow an arrow. The arrow is going to be one of the last pieces of the process, right? Structure dictates strategy. Strategy dictates indicators. So we're 3 deep into the process before I care what that arrow is saying or doing. All right. So thank you for the question. I appreciate that. All right. Another question from the YouTube channel. Praveen asked, if a trend in Momo are green on the daily, but below the 200 propulsion dots, can we still go long? Yes, Praveen, we can. But remember that 200 is still overhead, so it's resistance. It could be a target. And I want to remember that I might perhaps be a little bit more aggressive, look for a closer, tighter target because I'm not really in that clearly bullish environment. I'm not in the bullish hemisphere, but the simple answer is yes, absolutely. All right, next up is from the free trading room. Danger Will Robinson asks, increase in DXY from overnight low, is that because of the FOMC speaker at 9? Well, let's take a look at the 6E, which is actually the most accessible way. And actually 6E is a better look at the dollar than the DXY. And I know a lot of you might be thinking, wrong. Really? I don't want to look at the dollar for the dollar? Not really. Because remember, when you look at the dollar index basket is a bit of a mishmash of 6 currencies. The most heavily weighted is the euro. The second most heavily weighted is the yen, then the pound, and then you have some fairy dusting of 3 more currencies. All right. With that said, euro is 58% the dollar basket. Euro is accessible in that everyone can pull up the 6E futures, right? Okay. So with that being said, I'm going to have to deal with this dog. Gang, I'm sorry. Give me one moment. Darn dog. Give me one moment. All right. Dog situation handled. See, dogs don't care that you got a live show and you're talking about the markets. They don't care. All right. So back to the dollar. I look at the 6E because it is the cleanest way to look at the dollar. It's the one that gives me the most clarity. It's not going to be diluted by other currencies that are far lower weighted within that basket. All right. What's going on with the dollar? Yes, since the UK Open, 3 a.m., we have seen a little bit of a sell off, absolutely, in that dollar. But let's also keep in mind that's a 5 minute look at the past roughly 5 hours. Let's look at what's been happening over the past few weeks, over the past few days, and you can see that we have overall strength in the euro, right? There's no question about that. We have overall strength of the euro, and this might actually end up being something longer term we might be able to buy. Now, longer term, by the way, gang, I'm going to continue to possibly redefine what longer term is when I'm in the rooms with you all. You're going to see me pull up the 1 hour with a whole lot more frequency because we have a way, an effective way, now a very time tested way, right? This has been under testing for coming up on 10 months. Not to mention, this indicator has been in existence for over 10 years, but now we're applying it and calculating it and getting data feeds that are increasing the accuracy of the daily price movement range to a degree that I'm feeling really good about where we can start to apply this on a 1 hour chart. That's what I have here. And so we might start asking ourselves, all right, can we buy support and sell into resistance on that 1 hour? And if you step back and look at the 1 hour, it's not as convincingly bearish as the 5 minute. Remember, the daily is in an up trend, the 1 hour is in a neutral trend. And this is where I could never play pinball. Is anyone good at pinball? I was terrible at it. And I always felt I was the one where the pinball would just go right through the middle where those little flappers can't even touch it. Right. Well, that's what this is, only I'm good at this. And you can be too, which is we can just kind of play that pinball back and forth. And if we can get down to this level again, that's the price level I'm looking at based on volatility. And that's another way I'm going to begin to show you all more often an adaptation to, all right, we have daily time frames that look pretty good, but the follow through has been sometimes miserable. 5 minute volatility has sometimes been miserable. Where can we absorb the volatility and yet take advantage of the longer term move? Bingo, that is the 1 hour. So that's another way I'm looking at that dollar. And if I'm not bearish euro, I can't be longer term bullish or on any term. I can't be too bullish US dollar if I'm not convincingly bearish the euro. Intraday wise, I totally hear you. 5 minute time frame, that could be good for another hour or so. We'll see how we react at the bell. All right, next up is and as far as is it because the speaker? Great question. No, I don't believe so. I think it really triggered again. Looking at the 6E, you can see where the increase in activity whoop to the upside, 3:05 a.m. Eastern. Whoosh, that's the London Open, gang, and we've been basically a flush ever since then. All right, next up is bear with me, gang. What's the next question I have here? Thanks. Futures delayed on toss and they won't correct. Oh, it's a Canadian thing? Oh gosh. Okay. Yeah, I hear you. So then DXY would probably be your next best bet. Absolutely. I appreciate. Thanks for letting me know. So DXY is great, gang. Don't get me wrong, but the reason I teach that 6E is because again, you're looking at by a landslide, the heaviest weighted currency in that dollar index basket. Okay, next question is Alex. Alex says, I've been trading for about 10 years and I'm finding this rate increase period the hardest market I've ever encountered. What did your experience tell you about this market? Alex, I think I would be much more frustrated, and this would have started in June of last year, had I not adjusted time frame. So some of the time frame adjustments that you all are hearing me talk about, which is, hey, what is happening on the 1 hour? Is the same question I was asking myself when the daily frustrated me, the first 4 or 5 months of the year. And we said, look, we got to let go of the daily time frames. My beloved overnight swings, whoosh, can't do it. Back burner, put it on the shelf. In comes the 5 minute day trades. And that's the adjustment, not of strategy necessarily. It's the same tools, right? We just said, look, let's not be beholden to a position following through for days and days, if not weeks. It just isn't happening. Can we get follow through for a couple of hours or a single session? And that's really the evolution of that is dailies are okay. 5 minutes are getting a little frustrating. And now can we find the clarity and follow through we need in a 1 hour chart? So I'm not changing my indicators. I'm not changing my philosophy. I'm still relying on time, volatility, volume, and price. Yeah. But now we're saying, hey, is there another way that I can use time, volume, volatility, and price on another time frame and better position myself for the follow through that I'm looking for so that I can get into a trade and actually see it hit a T1? And that's my experience. It's not that this is easy. It's not. The experience tells us we got a lot of gears, you know? I remember the first time I drove our Shelby at six gears, 6 speed. I didn't know what to do at sixth, right? It was a whole new set of options. But now that I know what to do incrementally with them, yeah, it's a lot more fun to drive. Are we using all the gears we have as traders, right? Are we using all the gears? And that's what we're doing a lot of as we kick into 2023. Alex, great question. Thank you for your question. Thank you for your honesty. It is difficult. I'm telling you too. I agree with you. 32 years. This is a bit of difficult start to the year, no doubt. But we're adapting. Yeah. And adapting, we're able to find things like FCX that's had tremendous follow through for us. We're being discerning and we're finding those trends, and we're going to continue to do it. All right, gang. With that being said, I've got to hop into the day trading room. Sector Secrets Mastery. Thank you, free trading room folks. Thank you for the questions. I'll see you all on Tuesday. All right. And everyone else, be good to each other. Enjoy your weekend. It's a caution day, and I'll talk with you soon.